What's up, everyone? Welcome back to the channel. In today's video, I am going to be giving you a weekly summary of all the biggest bits of research that I've found throughout the week. I'm going to be launching a new show every single Saturday night where I run you guys through exactly what I've found throughout my week of research, summarizing some of the research that I reveal every single day on my Crypto Banter show to give you guys a quick and concise package of information that you can apply to your crypto journey. In today's show, we are going to be covering a few very interesting topics. Firstly, I want to cover some of the altcoins which I think will perform well heading into the month of December that have shown some relative strength. I want to talk through some of the big updates to the Fantom ecosystem, as well as the Arbitrum ecosystem as well, and a privacy concern that I think is becoming quite apparent in today's age that I want to help protect you guys against. So lots to cover in today's show. As I said, it's going to be a summary of some of the biggest things that I've seen throughout the week. This show will be the most alpha-packed show you'll see all week in crypto, and that is exactly what I want to bring to you guys every single week. And so make sure you smash the like button and click the subscribe button for this show so you don't miss out every single week. I'm very excited to be launching this new format. I'm going to be calling it Rapid Alpha because it gives you guys the alpha in a short, quick, concise package. Without further ado, let's get into it. The first thing I want to talk about is Fantom. Obviously, Fantom has seen renewed interest off the back of Cronje seemingly returning to the ecosystem and announcing some of the financials behind Fantom itself and the Fantom treasury. We have seen the Fantom price significantly recover over the last week or so. We've seen it increase by over 50% since its local bottom here, and we are approaching a very key trend line for Fantom, and this is this trend line currently sitting around 0.27 cents. I do think it could be absolutely massive for Fantom if it did break through this. But until we break this key area, then technically we still are in a downtrend. Until we can make a higher high here, which is currently sitting at 31 cents, technically we're still in a downtrend, but it is exciting times because we're finally getting some movement from the Fantom price. But what is the reason why we're getting movement from the Fantom price? Well, the first reason is because Cronje is back. We know that he has been the spiritual leader of sorts for the Fantom ecosystem. Him having gone or at least stepped away from some of his active development on Fantom did result in a lot of people losing interest in the ecosystem. But now that he's back, I think he does bring that element of hype back because a lot of people do look up to him. And I guess there's no doubt that he does develop and ship very good code, which I think is much needed in today's day and age, especially in the bear market. We want great builders. We want the best developers building on our chains. And Fantom is just one of those chains that Cronje seems to prioritize. But I do think off the back of Cronje coming back, it was this document that really started to get people interested in Fantom again. And that was a sneak peek into Fantom's financials. Now, I won't go through the whole document because, as I said, this show is called Rapid Alpha. We want to go through things quite quickly, but essentially over time, they've built themselves into a very good financial position. By November 2022, which was last month, they had over $450 million, 450 million Fantom tokens, $100 million in stables, $100 million in crypto assets, and $50 million in non-crypto assets. But it was this that really caught my attention. It was the fact that based on a current salary burn rate of $7 million, they estimate that they have 30 years left in worth of runway, which is quite a lot of runway considering they don't need to touch any Fantom over this 30-year period. Now, if we actually break it down, this means that the Fantom treasury has around $340 million worth of assets, obviously $30 years worth of runway. But interestingly, the Fantom market cap is $670 million. So almost half of the total market cap value is comprised of the treasury value, which is actually quite a large amount compared to our predictions for other blockchains. I think it was a really positive sign to get some transparency from Cronje and just find out how healthy the financials really are. Of course, Fantom has struggled for adoption in this bear market, as a lot of projects have. A lot of projects have seen their TVLs diminish. However, just knowing in the back of our minds that there is runway here for Fantom to keep developing, to continue to offer grants on board users, it just is a positive sign for the ecosystem. And we've actually seen this week, due to the renewed interest, result in Fantom being one of the most actively used chains of the week, getting 6 million weekly active addresses. Obviously, some of this is manipulated due to that Zen launch, which is a protocol that launched on Fantom. But we also got big news yesterday, and this was the gas monetization program where Fantom introduced a governance proposal, so holders of Fantom can vote on this proposal to change the 20% current burn rate of Fantom to burning only 5%, but then using the other 15% to monetize certain high quality dApps on the platform. So what Fantom actually wants to do is take away some of the gas that they're currently burning and use this to incentivize dApps to build, which I think is really cool because they can reward the great dApps on the chain, which incentivizes good development, and also retain some of the quality creators that are creating content for the chain. We've also seen off the back of this the Gitcoin grants proposal that they're starting to roll out to incentivize development on chain as well. So lots happening on the Fantom side. I think it was only right to start this video with an update there. Home says he's looking forward to the Liquid Driver master gauges. What I'm personally looking forward to in terms of the ecosystem is this. It's number 3, this Juice V3 implementation. If you guys don't know what that is, it's essentially going to be a perpetual decentralized exchange, kind of similar to like what GMX is doing, but with an order book style implementation. So I am excited for this, but also I am a fan of ByteMasons as well and Liquid Driver, and I think just we got some cool stuff happening in the ecosystem. So Fantom for the month of December is definitely one to watch. Okay, on to the next topic, and this is actually a slight change up. We are at the end of the video going to go into some of the altcoins that I do like for the month of December, but first let's talk about the next segment of Rapid Alpha, and that is the MetaMask IP address saga. And I know a lot of you have probably heard about this by now, but I do have an opinion on this, which I think you guys need to hear. And essentially what happened is, in case you've been living under a rock, MetaMask updated their privacy policy of how Consensus Software Incorporated, the creator of MetaMask, stores personal information, collects personal information. And there was one line in this that really caught people's attention, and that was that if you use Infura as your default RPC provider in MetaMask, then Infura will collect your IP address and your Ethereum wallet address when you send a transaction. Now, what this means is Infura, which is the RPC provider, so essentially the infrastructure that they use to talk with from MetaMask to the chain that you're using, for example, Ethereum, they need your IP address to process data, to process RPC inputs from Infura to MetaMask. So if you are using Infura on MetaMask, then technically they are collecting your IP address. This doesn't mean MetaMask is collecting your IP address directly, but Infura does have access to it if you're using it. Of course, you can choose not to use Infura, but from my experience, it is quite difficult to manually unselect the network itself. And most of the time, most users are going to end up using Infura. Adam Cochran said the MetaMask stuff is worse than it looked at first, not just collecting data when you send a transaction. The moment you unlock your wallet, it records all your addresses under the same IP. This database creates a major doxing risk in the space. Time to ditch MM. And I am seeing a trend now of a lot of people starting to use to leave MetaMask and use other wallet alternatives, for example, Block Wallet, Trust Wallet. I am seeing a lot of people leave the ecosystem. Is that rightfully so? Well, Joseph Lubin came out and said that MetaMask does not explicitly collect IP addresses. As we knew, MetaMask routes information necessary for your transaction to be processed by Infura, the RPC provider, which stands for Remote Procedure Call, where it takes requests from MetaMask and it returns answers to those requests. So technically, MetaMask isn't storing it. But what I would say is I do think it highlights a bigger issue in crypto, because it's not just MetaMask that's using your IP address. It's basically any DeFi dApp that you interact with, barring a few. I mean, Uniswap did come out and say that they don't need your IP address, but there are many dApps, there are many wallets, many applications that are actually storing your IP address. So I think the MetaMask problem isn't MetaMask exclusive, and it's not a reason to panic out of MetaMask itself. I think it just highlights that issue in crypto, that to process RPC requests, IPs are often needed, and this is widespread across the crypto industry as a whole. And there is one solution, a very obvious solution, and that is simply to use a VPN. Rand said in a tweet, it's been common practice. Many others have been doing it for years. This is referring to the IP address storage, and that you should please use a VPN. Guys, you don't need to use my link. You can use any VPN out there. I just encourage you guys to use a VPN. But of course, if you do want to support the channel and support my content, there is a 63% off NordVPN special, so you can protect yourself, so you can be secure in the crypto market. There is a link in the description to NordVPN if you want to sign up and get yourself a VPN. Of course, you don't need to use my link. It's simply, I simply just want to urge you to use a VPN, especially if these wallets, DeFi applications are storing your data in any way. It's always better to be safe than sorry. All right, on to the next discussion. And this is looking forward to the month of December and looking at some of the protocols which can continue to outperform against the market. Because you guys know I'm a big proponent in this market of identifying tokens that can perform irrespective of the macro environment. We've seen this over the last few months. Tokens like GMX, like GNS, even Dogecoin at one stage. We actually were lucky enough to call GNS for like a 3x and many other altcoins as well. They can outperform against the market irrespective of what the general market trend is. And this is because applications with real utility can continue to thrive in this market. And that is our job as researchers, to identify the projects and the narratives that can perform and that are gaining users and are generating real cash flow and operating like businesses. Because even if the market goes down and down and down and Bitcoin hits 10K, there will be applications which don't rely on that rainfall of liquidity and simply just rely on their user bases, and projects that are growing their user bases slowly and steadily over time. These are the ones that can continue to perform in the bear market. And there are a couple of ecosystems which are exhibiting this that I want to talk about today. And you guys know that most of my time these days is now dedicated to finding these small caps, but also finding these ecosystems which can outperform in this market. And one of these ecosystems is clearly Arbitrum. And it's a very strong narrative off the back of Arbitrum Odyssey, which is the initiative that they're currently running to get people using the network ahead of the airdrop. But we can see that the Arbitrum activity is absolutely exploding, even though it's a bear market. And for most chains, most metrics are down. The daily active addresses are exploding on Arbitrum. The daily transactions are now almost at Ethereum's level of 700,000. The TVL is continuously growing. The unit contracts deployed, so if we look at this from a developer perspective, is growing. A lot of dApps, so we saw Beats on the Fantom side actually deploy on Arbitrum. Trader Joe, which is an application on Avalanche, the biggest DEX over there, now deploying on Arbitrum. We're seeing GNS now deploying on Arbitrum, which originally launched on Polygon. Obviously, GMX is on Arbitrum. A lot of great dApps are now realizing, well, there's a lot of activity on this chain right now. Why not deploy our contracts on Arbitrum? I mean, what's the point of being chain exclusive when we can deploy on Arbitrum, take advantage of that huge user base that's growing, and at the same time, take advantage of that. So Arbitrum is definitely an ecosystem that is performing well amidst the general bear market. And I do think it's important now to have a look at the ecosystem and how we can potentially gain exposure to the ecosystem as investors, because as you guys know, Arbitrum does not have a token. And just as a quick note here before we talk about that, the TVL on Arbitrum is now much bigger than any other layer one. So we see Arbitrum now double the next biggest L1, which is Optimism, then DYDX, then Loopring. So it's performing extremely well from a TVL perspective. However, Arbitrum doesn't have a token, as I said before. So the only way to get an Arbitrum token right now looks like it will be through the airdrop, but we don't know exactly when this is. It seemingly has been delayed to possibly Q1 or Q2 next year, and the airdrop has likely already been taken in terms of the snapshot, despite Arbitrum Odyssey relaunching. There's a chance, if you follow the steps in this thread, which I outlined on my Twitter, that you can still stand a chance to get an airdrop. But for me, the most enticing part of capturing upside to this ecosystem is not Arbitrum and the token itself. It's actually on the dApp layer, because we know in crypto that the L1s don't always do the most efficient job of accruing value due to chain usage. Oftentimes, it's the dApp layer that does accrue the majority of the value. So I think by selecting quality dApps, which are exposed to the Arbitrum ecosystem, that's actually the way to capture exposure. And this could be a narrative which runs in the very near future. And it's already started running. I talked about some of these projects a couple months ago on my Twitter, but it's becoming more and more relevant as Arbitrum gains steam. So let's dive into the conversation of the Arbitrum tokens that could perform. I'll go into more depth about this next week on my crypto banter shows, but as the name Rapid Alpha suggests, let's just run through rapidly some of the projects that I am enjoying in the Arbitrum ecosystem. The first one is Dopex. Dopex is an options exchange. So it's not a perpetual exchange where you can trade futures of tokens. It's an options exchange. So options are essentially when you agree to purchase or sell an asset at a specified future date. for a specified future price. This can, in many cases, be capital efficient because you don't need to have a whole lot of exposure to an underlying position to gain the benefits of the upside or the downside for that token. So for many traders, options trading is a risk management tool, and Dopex, in my opinion, is the strongest decentralized options exchange, but it's also an Arbitrum, so it also captures upside to that ecosystem. And there's a few very cool announcements coming in December, which is why I think this conversation is pertinent right now, because they are launching their options perpetual exchange, which is very cool. But it's not just for perp futures; it is for options trading as well. So you can trade option perpetuals, which is very, very cool. That is going to be launching soon on Dopex. That's potentially a catalyst. In the meantime, we've seen the unique holders exploding. Dopex unique holders are over 170,000 unique addresses now per the DPX token. And I do believe that options exchanges, they haven't really seen their time to shine yet. But when I think about how markets tend to progress, the first step in markets is spot trading. So people need to trade spot, and new markets tend to gravitate towards spot trading because that's the simplest way for new participants to enter an ecosystem. And then markets typically, as they develop over time and get smarter and more experienced traders come in, that spot trading graduates to perpetuals trading. And that's why we've seen the explosion of GMX and GNS and obviously even the centralized exchanges, Bybit, Binance. Everyone wants to trade perps because that's where the intermediates can start to apply their trade. But then when we look into the future of where things are headed, I do believe that as more experienced traders come into the market, more institutions come into the market, there will be a demand for options products because that is really the next step after perpetuals. It's options trading. And Dopex being one of the better protocols in this niche, I do think from a long-term perspective, can put itself in the position to gain that upside. Will there be better projects that come and take Dopex's market share? Possibly. But when placing our bets on this narrative, and it certainly is a narrative that I think at some point will perform well, then I do believe Dopex is one of them that I do think we can look at. And obviously, it is gaining steam ahead of this Arbitrum Odyssey and the Arbitrum boom that's currently happening. But just remember, this video is not financial advice. I'm not giving you calls here. In fact, I haven't actually bought Dopex yet, but I'm keeping a close eye on it. And I urge you in this video to use these calls, or use these less so calls, but suggestions as a starting point or a springboard to do your own research, and really use this to get the wheels turning in your head of new narratives to potentially look at, and then you can go down the rabbit hole a little bit more. So hopefully these videos do a good job of giving you guys a starting point to kind of base your thesis off, and now it's up to you to substantiate those theses. But Dopex is definitely one I think that's good in the options category. Interestingly, there's a utility token, which is Dopex, which is a rebate Dopex, which accrues some of the fees from specific vaults. Some people think that Dopex will perform better than the Dopex token itself. If I were to personally DCA into Dopex, I might have a look at putting a smaller percentage into RDPX, because that is one that will accrue value as well. All right, so on to the next Arbitrum token, which I think could be fairly hot in the month of December and beyond. It is UMAMI, UMAMI Finance, which is essentially a yield strategy vault offering site. I don't know if that's the best way of describing it, but essentially they have a bunch of vaults where they execute yield strategies. They call it institutional grade DeFi yields, where you can execute some of these strategies in quite an easy one-click fashion and get access to some pretty nice yields and some pretty cool strategies. So it's fairly easy. It's fairly retail friendly, because you don't have to execute these strategies yourself. You can just go into UMAMI, and they have some pretty cool vaults, and sustainable vaults too, because we know how the whole fake yield thing went down last year. We are looking for projects that can generate real yield. We're looking for projects that are cash flow generating, and UMAMI is one of these, because they certainly fit the bill here in terms of vaults that can generate real, consistent, solid yield. And I do think they're positioned to capture massive value in DeFi. C. Dotas does a good job of explaining why, and I'll just run through a few of his key points. He says, liquidity providers often receive decent yields, but providing liquidity requires certain sector-specific knowledge that UMAMI Finance thinks institutions and regulated entities lack. They propose a hybrid model, combine rigorously modeled, back-tested, regulatory compliant methods with trustless, non-custodial or DeFi protocols, essentially acting as a middle layer to connect capital and the protocol. UMAMI Finance, which will be launching their new GLP vault through their partner GMX for USDC, ETH, BTC. GLP is the liquidity provider of the Real Yield platform. Now, this is quite cool. They are launching their V2 vault in December, which is why I'm having this conversation with you guys now, because this could potentially be host to a new influx of liquidity coming into UMAMI. The vault essentially allows you to stake UMAMI, receive rewards in the form of wrapped ETH or USDC. The upcoming Delta Neutral Vault is built in partnership with GMX and Tracer DAO for around a 20% APR in USDC. Why do I like UMAMI first and foremost? Well, I just think that they are shipping code. I think that they are actively looking at new vault strategies. They're actively looking at partnerships, as we saw exemplified by the GMX partnership. And the team is very strong because they've just shown to be builders in a bear market. And when I'm looking at projects to invest in DCA into it, or at least just consider in a bear market, I'm looking for projects that are actively shipping code, that are actively developing, that are actively pioneering, and not just being silent or quiet or toning down on their development, but actually ramping up. And UMAMI is clearly a project that's doing this. There's many, many others as well. Of course, Dopex one. You've got Kujira, which is another. There's many other great projects that I could list them. But yeah, this definitely fits that bill. They also just doxed the team. So that was one of the red flags I had with it previously, was that the team wasn't doxed. Now they did release more details on the team. And they also onboarded a giga brain called Haim, who a lot of the DeFi community seems to highly respect. So that is always good that they are looking out for and acquiring new talent in this market. So that's a positive sign. Now, there are many other Arbitrum tokens, of course. These are just the two I've got my eye on at the moment. Clearly, GNS is launching on Arbitrum soon. Just the thing with GNS is, although we've done very well, I think I called that like almost $1 or $1.50. Now it's almost $4.50. It is starting to look like a slightly overcrowded trade. On the RSIs, it's starting to look slightly overbought. It's just not a trade that I'm aping into right now. So you can obviously look at GNS as one of the beneficiaries of this Arbitrum wave that's happening at the moment, but it does look slightly overbought in the short term. So trade with caution with GNS. I actually did take some profits. That's why I started today's video, but there are many more great Arbitrum protocols, which I'll get into in the future. Those are just the two I wanted to mention in today's show. Now, there's one more narrative, which is very popular at the moment, and I think we're not quite done with this narrative, and that is oracles. Chainlink is the main oracle, which is kind of kickstarting this. And the reason why Chainlink's been running recently, if we look at the charts, theoretically, it isn't really running hard in the overall scheme of things if we zoom out. I mean, it still is down 85% from its highs, right? It's not like Matic, which is only down 50% from its highs now. But we have seen over the last couple weeks, Chainlink starting to gain steam. After it bottomed out at 582, we've seen it push up into the 750 region. Now, this is because of Chainlink staking, which is finally giving retail users utility for the Chainlink token. So obviously, Chainlink is an oracle token. So it gives price data to DeFi applications, which essentially help the entire crypto ecosystem. Chainlink's got partnerships all over crypto. But the thing is, previously, one of the main ways Chainlink accrued value was through projects needing Chainlink tokens for Oracle data. They needed to pay in Chainlink tokens, so they needed to buy Chainlink tokens and sell them back to Chainlink. But the problem is that was a very protocol side demand system. They didn't have much retail side demand. But now with staking, people actually have a way to secure the network and earn yield at the same time. And I do believe it's a very big catalyst for Chainlink. We saw Ape recently release their staking vaults as well, seemingly copying Chainlink, given the fact they announced it like a week later. But Chainlink is running off this narrative because staking is finally giving you, from a retail perspective, an opportunity to benefit from the network while securing the network at the same time. And over the last few weeks, we've seen Chainlink, not even just from the retail side, but from the usage side, actually print its all-time highs for the year, or for the last 6 months, verifiable random function requests. So an increase of 259% over the week prior, meaning the Chainlink network usage is actually the highest it's been in 6 months. Now, this is quite bullish for the network itself, given the fact that's in tandem with the total number of unique addresses that hold Chainlink growing to 746,000, which is a plus 45K increase since the beginning of November. And when I look at long-term holds, when I look at tokens that I think I'm pretty confident DCAing into and holding with a long-term time horizon, there's not many, by the way. because I think you have to be pretty strict and pretty rash with how you, or not rash, maybe that's not the right word, but pretty cutthroat with how you approach profit taking and rotations in altcoins in this market. Chainlink's one of those that I'd seriously be comfortable just buying and holding, given the fact that it's just so fundamentally needed in crypto. And now staking is finally giving it that extra boost, that extra catalyst. So from a long-term perspective, I like Chainlink, but the reason why I'm discussing it in the context of December is because it's hot right now off the back of staking, and the Oracle narrative may not be done, because you guys know when one project seems to run in a particular sector, typically what happens is we see liquidity flow down into other protocols in that same sector. So when let's say take the gaming run, for example, last year, Axie Infinity started running, it blew up. That led to Sandbox and Decentraland blowing up in terms of market cap. And then people took profits from those projects, and then they put it into the smaller gaming projects like PYR and UOS and even Gala to some extent. And then those started running. So we know how the rotation game works. It's the same thing happened in Fantom, when we saw Fantom rotate into Spooky and then to Liquid Driver and Beats and those ecosystem projects. Same thing, in my opinion, happens on a smaller scale across a variety of narratives. And it's no different when it comes to something like Oracles, where Chainlink runs, gets a bunch of people in with staking, the price rallies, and then people start to look for other alternatives, because there are good oracles that aren't just Chainlink. And I'm not making calls in today's video. I'm just pointing you guys in the direction of potential other projects which benefit from certain narratives. And I do think Band's one of them. And also Arsh Meister says TRB is another one. So maybe just look into the Oracle narrative as something that could run off the back of Chainlink. Remember, the point of these videos is not necessarily to give you calls. It's to point you in the right direction in terms of things I'm looking at. So I hope you guys enjoyed this video of Rapid Alpha. It ended up being roughly 26, or probably by the time I'm done, 27 minutes, which is maybe slightly longer than I wanted. But considering this is an entire week's worth of research condensed into one video, I think I did a pretty good job. And just to reiterate, what I want to do is give you guys this video every single Saturday. So it's my Saturday night. If you're in the US, this will be out on Saturday morning. If you're in in Europe, it'll be out on Saturday afternoon. I just want to give you every single week a recap of my findings, because I know a lot of you are sensitive for time. And if you don't have time to watch my content throughout the week, I think this just gives us a great place to all convene and discuss some of the topics that we've been researching. Of course, though, if you are more active in the space, you know that I post all the time on Twitter. So if you're not following, give me a follow. I'm a very frequent poster. I post probably 10 times a day, and probably a thread once or twice a week as well. But also I have my daily live stream of Crypto Banter, where I stream Tuesdays to Fridays. So that's where I give you the broader overview, probably a bit more scope, a bit more of an in-depth look into some of these topics, all of which I covered on the show. So if you want to be first to the news, of course, watch me on Crypto Banter. But this show serves as handy maybe for the people that either miss those shows or don't have time to watch them and want just a little quick recap. But of course, on Crypto Banter, you can, and there's a link in the description to this, you can watch the full form videos for every single one of these topics, which gives you some more information if you want to do some more research. But yeah, hope you guys enjoyed. Smash the like button if you enjoyed. Give me a comment. Let me know if you like this new format. And of course, if you're not subscribed. Until then, I will see you in the next one next week. See you later, guys.